It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.
Hi guys, good afternoon. A little bit earlier today because of the ECB rate decision. Piotr here, and this is a New York Open live market coverage on Global Light Forex YouTube channel. My name is Piotr. Welcome, and again, good afternoon. Let's start with the risk warning. Guys, please bear in mind trading FX, trading crypto on margin carries a high level of risk, may not be suitable for all investors, can sustain a loss of some or all of your initial investments, so please do not invest the money that you cannot afford to lose. Okay, the toughest thing is done, I mean the risk warning, right? So let's have a look what we have ahead of the rate decision within the next 12 minutes or so. Euro dollar, that's what we discussed earlier today. Some kind of the formation similar to the head and shoulders here on this 15-minute chart. We cannot call it head and shoulders because it's not at the top of the market, right? We see, so we can call it, let's say, something similar to head and shoulders, but I've explained already that because of what was created during the morning hours, some kind of the megaphone formation, we are probably not gonna to get this one, and probably, if anything, that might be just left shoulder in the future if we wanna talk about this type of the patterns, something similar to the left shoulder. We are still within, again, something similar to inverted head and shoulders with the price target above 113. That's what we discussed before. And you know what? Looks like option traders are telling that we are right. They're also trying to tell us that I mean option traders by implied volatility, the lowest from 2014, whatever, trying to tell us that it's gonna be like the two things, right? Because we have to be aware that it's not only ECB, it's also US CPI. Both are not gonna be, looks like it's gonna be non-events, because what options market traders are expecting is a 50 pips move. If we are talking about the 50 pips to the upside, actually it's quite nicely, it's gonna to hit our supply, intraday supply, right? What we discussed a few times already, and that's gonna be also at the top of this previous ECB day, right? Over here. Boom, all right? Over here. We will see. One thing needs to be corrected because probably yesterday looks like my website, my site didn't refresh it correctly. I've mentioned yesterday that based on my FX book, there's still a retailer in favor of longs, but looks like it already changed on Monday. So looks like retailers are short on average price 12.44. So I would like to say I'm sorry because of this mismatch. But anyway, it looks like based on the option market players, nothing extraordinary going to happen during the day today. in regards to euro. It might be a little bit more fireworks in regards to euro pound. I've been long actually euro pound and been stopped under this lower shadow. It happens sometimes. Okay, so all we have to do right now, we have to wait for the ECB decision. Then we are going to have a break around 2:15, 2:15 CET, and or maybe 2:10, we'll see. And then we are going to get back for Draghi press conference and US data, right? Again, we are awaiting US CPI as well. Yes, I'm still waiting for, if someone wants to ask, I'm still waiting for this 13 something in case of 1320, 1330, in case of the opportunity to try to go short, right? But also, if we are not gonna go there, right, but immediately we are gonna to try to move lower, I'm going to watch levels around the weekly open or just below some tiny stop hunting, and that's what we were trying to visualize yesterday, right? Some kind of the quick consolidation on smaller time frame and move back to the high, right? So yes, I'm watching both sides actually, and I'm ready to try to trade both sides. Depends on which scenario is gonna to be played out, what they wanna do. I will try to join one of the sides. We will see. We might see some kind of the move right after the decision, right? So the important thing is gonna be where we are gonna close at the top of the hour. I do expect some move higher, move to the upside, right? That's what I expect, really. We will see. The good thing, it was the correct reading this morning about this something similar to the shoulders. I have to say like that. I'm sorry. Do we have any kind of the channel over here? Can we draw something here? Yeah, we can. Cool. Okay. Okay, and this demand over here, yeah, it's quite those broken upper shadows. That's the bottom of that channel with stops. Yeah, that might be interesting. We'll see. Few more minutes, and we are gonna to get the first answer. Market is talking or is whispering that we may get more dovish ECB, even more dovish ECB. Taking into consideration the information we got yesterday, right, from Cyprus, for example, or from Italy, they are not good. They are not good. The question is, what is already priced in? That's the very good question. Okay, so this megaphone we can do like this. Okay, and we are going to watch on a smaller time frame. 3 minutes. I may try to look at Euro Pound again. We are again at the bottom of the channel, but that's gonna be probably more related to the EU summit, Brexit related. I still would like to see some stop hunting to the upside towards this supply around 8,860, 8,875. That's why I was trying long after the UK data, right? Nice rejection at the bottom of the channel, pullback. There was a demand on a lower time frame. It looks like this was not enough, so maybe we are gonna to play out this over-under over here and then strong move back inside the channel. We'll see. Euro dollar for now. 2 minutes to go. Please bear in mind, because of the YouTube live streaming rules, there are a small delay, so please check on your side. I will try to place info into the chat as soon as I can as well, but yeah, a reminder that there is a, because of the rules, small delay. In the meantime, there was a monthly OPEC report. So it's in relation to oil. It's in relation to the EEA later today. That's what happened yesterday. That's the private API over here. So I'm going to put into the chat. Just in case. Thirty seconds. There you go. What else? What else? Looks like ECB sees rates at present level at least through the end of 2019. Still believe we are gonna to get cleaning, at least cleaning to the upside. If not the strong rise, right? Changing some direction, at least some cleaning to the upside. That's what I That's what I'm waiting for, actually. Or some strong move to the downside, and then later during the day some kind of the reversal. We'll see. And here is the link to the full press release. Nothing special right now. Boring, at least for now, very boring. Of course, I'm going to listen, Mr. Draghi. We are going to listen together, and we'll see. So at least for now, the option traders were correct. No fireworks, not at all. So we are waiting. Of course, we are waiting. We do have around 8 minutes towards the early close. So let's wait and see. No other way around, we have to be patient. Actually, I'm not surprised, to be honest with you, at least for now, that there is no action. We may have this double kick around 2:30 CT with CPI and Draghi a little bit later on. That might produce some 30-50 pips move, either way. So let's switch to hourly. Probably we are going to take out this swing high stops above. would be great to know where they may try to attack, if we are going to see attack. So, awaiting early close, and we are going to make short break. No, we have to something to talk about, right? And with this type of the action, tough. Even more boring is on dollar yen over here. That's what we discussed earlier today during the pre-London Open. Aussie is trying to do well. Cat, but didn't make a pullback yesterday. Okay, USA. So, within the next 29 minutes, we are going to get US CPI. We are going to start ECB press conference, right? Just a reminder, guys, we also have 10-year bond auction in US, and we are going to get the numbers at 7:01 p.m. CET time, and also at 8 p.m. CET time we do have FOMC meeting minutes, right? So maybe something during the late hours after during the second part of the US session. We will see. For now, leaving for a break, guys. I'm already tired after this first part of our meeting. Anyway, hopefully we are gonna to see some action around the 2:30. So break for now, and I'm going to be back before the US data announcement.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex social trading. Spend your time doing what really matters to you.
Hi guys, it's the second part of today's meeting. Just a reminder, we started earlier today because of the ECB rate decision. Boring like hell, at least till now. That's what options trader were trying to tell us, where the implied volatility showing the move around 50 pips. That would be great if we are going to get that 50 pips, especially to the upside. That would create the opportunity to sell the rallies into 12.20, 12.30, 13.12, geez, 13.20, 13.30. We'll see. Looks like yesterday high, under pressure. We may try to clean these stops. We'll see. We are awaiting US CPI and we are awaiting Super Mario Draghi speech, press conference. First it's gonna be US CPI, then of course Super Mario Draghi. Don't forget guys that later today 7:01 p.m. CET there is a 10-year auction in US, and 1 hour later at 8 p.m. CET we are going to get latest FOMC minutes. So maybe we are going to see some kind of the movement during the second part of the session in New York. That could be the case. We'll see. For now, still waiting for US data. The thing is, but because of the live stream, YouTube live stream rules, there is a little bit of the delay, like 15 seconds when you can check the clock right bottom corner. So you are gonna to get the info what kind of the delay we have. So please check the data announcement on your side. I will try to put it on the chat window as well. Out is pulling back. Yes, looks like there was another round of stop count. That's what we discussed yesterday. There is a still chance that Aussie will try to pull back versus US dollar, right? Based off what we have here. So we are again testing the supply. The thing is that we took out yesterday high. The problem arise around the high of the 21st of March, right? Still more to go, but still to the downside, I would say I wouldn't be surprised, to be honest with you, to see more stop count. That would be great from Aussie Kiwi perspective, where I'm waiting for a pullback, right? We were discussing this yesterday. But for now, we are going to focus on euro dollar, we are going to focus on euro pound, and we are going to focus on pound USD. These three during the second part of our meeting. We'll see. Probably we are gonna go through without the break, as we are gonna to listen Draghi, and around the end of the Draghi press conference we are gonna to end our meeting today. Just a reminder, we are going to cover pre-London Open tomorrow at 8 a.m. and Friday pre-London Open at 8 a.m. CET as well. So tomorrow 8 a.m. CET and Friday 8 a.m. CET, just a reminder. All right, we do have like 40 seconds to go. CET. So you have to convert CET to GMT. It's probably 1 hour, if I'm not mistaken. Yeah. One hour ahead, GMT. All right, so we have spike on euro. Everything is spiking against the dollar. Only dollar yen is trying to hold narrow range. So what did we get? Guys, if the Draghi press conference is gonna be too loudy, if it's gonna disturb you, just let me know. I'm going to eventually mute or make it. So that's the right now what we hear is a ECB press conference preparation. Looks like Draghi's a little bit late. And you can watch Draghi here. Okay, looks like almost ready. So let's have a look what we have here. Yeah, not good. We didn't hit the even 13, not yet.
Ladies and gentlemen, the Vice President and I are very pleased to welcome you to our press conference and will now report on the outcome of today's meeting of the Governing Council. Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. We continue to expect them to remain at their present levels, at least through the end of 2019, and in any case for as long as necessary to ensure the continued sustained convergence of inflation to levels that are below but close to 2% over the medium term. We intend
So guys,
to
maybe
continue investing
we didn't
in
get what
full
we were waiting for to the
principal
upside,
payments
so
from
maybe we are gonna to
maturing
get what we were
securities
discussing yesterday
purchased
to the
under
downside,
the
right?
asset purchase program
Just a reminder
for
about
an
this
extended
visualization
period
we
of
were
time,
trying to do
past the
yesterday.
date when we
So
start
there's
raising
nothing to
the
do,
ECB
we have to be
interest
patient
rates,
and that's it right
and in
now.
any case for as long as necessary to maintain favorable liquidity conditions
As long as necessary.
and an ample degree of monetary accommodation. The Governing Council stands ready to adjust all of its instruments as appropriate to ensure that inflation continues to move towards the Governing Council's inflation aim in a sustained manner. Details on the precise terms of the new series of targeted longer-term refinancing operations will be communicated at one of our forthcoming meetings.
About
In particular,
LTRO,
the pricing of the new
TLTRO, they are gonna
TLTRO
to
3
communicate
operations
in the upcoming
will take
meeting.
into account a thorough assessment of the bank-based
First line
transmission
dosage.
channel of monetary policy, as well as further developments in the economic outlook. In the context of our regular assessment, we will also consider whether the preservation
There
of
is
the
a-
favorable
there is a
implications
one
of
level.
negative interest rates for the economy requires the mitigation of
looking
their
at
possible side effects, if
where the
any,
stop hand is
on
possible.
bank intermediation. The information has become available since our last Governing Council meeting in early March confirms slower growth momentum
Slower growth
extending
momentum.
into the current year. While there are signs that some of the idiosyncratic domestic factors dampening growth are fading, global headwinds continue to weigh
This
on
zone
euro
over
area
here,
growth
it's also interesting,
developments.
because it might be
The
that
persistence of
we have this
uncertainties
kind of the
related to
consolidation.
geopolitical factors,
If we are gonna to break through,
threat of
then we are
protectionism,
gonna to get to
vulnerabilities
1230,
in
right?
emerging
That's
markets
possible as well.
are leaving marks on economic sentiment. At the same time, further
to the
employment
upside.
gains and rising wages continue to underpin the resilience of the domestic economy and gradually rise in
We'll see
inflation
if we
pressures.
can get here.
However, an ample degree of monetary accommodation remains necessary to safeguard favorable financing
Just a
conditions
reminder that
and
option
support the economic expansion,
traders,
and thus to ensure that inflation
they don't
remains
believe
on a sustained
for
path
higher volatility
towards
on euro
levels that are
today,
below
on euro
but
dollar.
close to 2%
They're just
over the
expecting
medium term.
something around 50 pips.
Significant
So,
monetary policy
it
stimulus
might
is
be
being
that
provided by our
market
forward
will try
guidance
to
on the
fade
key
attempt
ECB
to
interest
break
rates,
important levels. So
reinforced by
we
the
have to be extremely
investments of the
careful here.
sizable stock of acquired assets and the new series of TLTROs. Let me now explain our assessment in greater detail.
Okay, greater details. He's going to
Starting
explain
with
in
the
greater
economic
details.
analysis. Euro area real GDP rose by 0.2% quarter on quarter in the fourth quarter of 2018, following an increase of 0.1% in the third quarter. Incoming data continue to be weak,
Incoming data
especially
continue
for
to
the
be weak.
manufacturing sector, mainly on account of the slowdown in external demand, which has been compounded by some country and sector-specific factors. As the impact of these factors is turning out to be somewhat longer lasting, the slower growth momentum is expected to extend into the current year. Looking ahead, the effect of these adverse factors is expected to unwind. The euro area expansion will continue to be supported by favorable financing conditions, further employment gains, and rising wages, and the ongoing, albeit somewhat slower expansion in global activity.
Stops taken out. That's what we
The risks
discussed.
surrounding euro area growth outlook remain tilted to the downside on account
we are
of the
reacting within the
persistence of
zone.
uncertainties related
We'll
to
see.
geopolitical factors, the threat of protectionism, and vulnerabilities in emerging markets.
That's the supply
According
over
to
here.
Eurostat's flash estimate, euro
We
area
might
annual
eventually
HICP
try
inflation
to
was
go a little bit higher.
1.4% in
We'll
March
see.
2019, after 1.5% in February, reflecting mainly a decline in food, services, and
It's
non-energy
time, guys, to
industrial
reverse,
goods
make
price
it one-to-one,
inflation.
hit supply.
On the basis of current futures
But it might
prices
be tough
for
through
oil,
this
headline inflation
broken
is
zone.
likely to decline over the coming months. Measures of underlying
We
inflation
reacted exactly at
remain
the point
generally muted,
we described.
but labor cost pressures have strengthened and broadened amid high levels of capacity utilization and tightening labor markets. Looking ahead, underlying inflation is expected to increase over the medium term, supported by our monetary policy measures, the ongoing economic expansion, and rising wage growth. Turning to the monetary analysis, broad money M3 growth increased
Risk to
to
the
4.3%
euro
in
area outlook
February
still tilted to
from
the downside.
3.8 in January. Looking through some volatility in monthly flows, M3 growth continues to be backed by bank credit creation, notwithstanding a recent moderation in credit dynamics. The narrow monetary aggregate M1 remained the main contributor to broad money growth. The annual growth rate of loans to non-financial corporations
Underlying
rebounded
inflation
to
muted.
3.7% in February.
Headline inflation
from
likely to decline over the
3.4% in
coming month.
January,
Underlying
reflecting
inflation over
mainly
medium
a
term.
base effect. Looking through short-term volatility, the annual growth rate of loans to non-financial corporations has moderated in recent months, reflecting the typical lagged reaction to the slowdown in economic growth. At the same time, the annual growth rate of loans to households remained broadly unchanged at 3.3% in February. The Euro Area Bank Lending Survey for the first quarter 2019 suggests that overall bank lending conditions remained favorable. Our monetary policy measures, including the new series of TLTROs that we announced in March, will help to safeguard favorable bank lending conditions and will continue to support access to financing, in particular for small and medium-sized enterprises. To sum up, a cross-check of the outcome of the economic analysis
He's trying to
with
make the
signals
summary,
coming from
and we
the
are going to
monetary
get the
analysis
question.
confirm that an ample degree of monetary accommodation is still necessary for the continued sustained convergence of inflation to levels that are below but close to 2% over the medium term. In order to reap the full benefits from our monetary
USD
policy
cut
measures,
didn't get back to
other
the
policy
zone we
areas
were discussing
must
yesterday,
contribute more
unfortunately.
decisively to raising the longer-term growth potential and reducing vulnerabilities. The implementation of structural reforms in euro area countries needs to be substantially stepped up to increase resilience, reduce structural unemployment, and boost
Unfortunately,
euro
Pump
area productivity and growth
didn't
potential.
do what
Regarding
I
fiscal
was looking for,
policies,
right?
the
I've been
mildly
looking for this
expansionary euro area
stop
fiscal
cleaning to
stance
the upside,
and the operation of
or
automatic stabilizers
I've been
are
looking
providing
for the
support
stop cleaning to the downside
economic
below yesterday's
activity.
low. We are,
At the
if
same
we are going to
time,
take into the
countries where
consideration
government
this
debt
move
is
yesterday,
high
we are
need
inside
to
the range
continue
still.
rebuilding fiscal
Nothing to
buffers.
do from my perspective.
All countries should reinforce their efforts to achieve a more growth-friendly composition of public finances. Likewise, the transparent and consistent implementation of the European Union's
would be
fiscal
very
and
careful,
economic
Mayor.
governance
I would be
framework
very
over
careful
time
here.
and across countries remains essential to bolster the resilience of the euro area economy. improving the functioning.
What they
of
did for
economic and
now.
monetary
What they
union
did for
remains
now.
a
For sure they
priority.
took the stop
The Governing
above
Council
yesterday high.
welcomes the
That's for
ongoing
sure.
work
What they
and
did
urges
now
further
on the move to the
specific and
downside
decisive
with
steps
this
to complete the banking union and the
rally,
capital
they
markets
took out
union.
another stops
We are
here.
now at your disposal for
Some
questions.
more towards 1250. But overall we are talking about 20-25 pips.
Mr. President, one question. First of all, you mentioned that in the context of regular assessment, you will consider whether the preservation of favorable implications requires mitigation of possible side effects on bank intermediation from, I understand, from negative rates. You made comments to similar effect at the Watchers Conference recently, and it sparked a lot of speculation that you might be on the cusp of introducing a tiering system. So I would like to know from you whether that's something that's on the menu, that's something that you are considering. That's my first question. And the second is, you also mentioned that we'll get the pricing of TLTROs in the forthcoming meetings. We saw the bank lending survey yesterday. In your assessment, in terms of the loan growth,
Now trying to break down, let's have a
does
look
it
if
give
it's only
any
stop hunting or
indication
something
of-
more.
for the conditions that could underpin the incentive scheme for the next TLTROs? Thank you.
Well, I would say to the second question, I would answer it's too early. It's just too early. So if you read the statement I just gave, there is.
If we are talking about the 50 pips, right, that's what the option traders are saying. So we might see eventually 40, 1240, we've seen 1250 and strong trying reverse.
Mitigation.
So we took the stop to the outside, we took the stop to the downside. Let's see what next.
The analysis will be carried out. And it's two conditions. We'll take into account a thorough assessment of the bank-based transmission.
I might consider staying long here.
Developments in the economic outlook. So we are looking at that, both things. And
I'm not yet in. We are gonna to see when I'm in.
I would say the Governing Council was pretty, I would say, we didn't vote, so it's not unanimous or anything, but it was just consensus on the need for
I
further
think that
analysis.
somehow they will try to get into this
And that is, in a sense, includes the
highest
first question.
selling
This
zone.
language echoes what I did say in
That's
the
what I
Watchers
think.
speech. And that's it. We've got to look at that.
Ms. Jones?
And the way we look is well specified here. We look at the functioning of the financial intermediation
one.
channel. As I
Congrats,
said, the
Mayor.
assessment of the bank-based transmission channel of monetary policy, as well as further developments.
If
in
I'm
the
gonna
economic
to see
outlook.
the retest and
So we
lower
have to see
shadow
how the
around
economic outlook
56,
will
I
turn
might
out
consider
between now
tiny long
and the
here.
next monetary policy meeting.
Claire Jones.
I'm sorry, where, by the way, where also we'll be having the new projections.
Claire Jones, Financial Times. There seems to have been, over recent months, quite a marked deterioration in the 5-year on 5-year inflation swap rate that suggests markets are becoming more concerned about your ability to hit the inflation target. In the past, the fall in this measure was a trigger for the expansion of QE, the beginning and the expansion of the QE program. So how concerned are you about this time around, and how would you intend to react if this fall continues? And the second topic, we've had some remarks from the US President yesterday saying that he's going to impose tariffs on some European goods. To what extent are you concerned by these remarks, and does it represent a serious risk to the Eurozone economy if this comes about and there's an intensification of the trade relations between Europe and the US? Thank you.
I would like to see the retest of this 56 either now with
your
5
first
minutes
question
closing at
points
the
out
high,
to the,
or 5
continued,
minutes closing at the high,
deterioration
retest of 56
of inflation expectations
strong close
over the last several months.
with the lower shadow
And
on the hourly.
we had quite a substantial analysis of why this is so. It's quite clear that the
Then I'm,
sliding of the
yeah,
five-year,
it might be
five-year
with
inflation
very tight stop, I
expectations
may try.
corresponds to a deterioration of the economic outlook. It's also quite clear that as the economic outlook, especially the economic activity, slows down, also the
the implied volatility is the lowest
expect,
since 2014.
lesser of a
So
pressure.
that's what I've mentioned during the first part of our today's meeting. That the
So
option
we
traders
have,
they were
we
trying
have
to tell us
underlying strength
it's
in the
gonna
economy.
be non-event, and looks like
so
they
we
were
analyze
right.
why this is so. The answer is that the expectations have, inflation expectations have deteriorated predominantly because of
The good thing is
risk
that we
negative
were
risk.
able to read levels.
Which is a big
That's
difference
what we are
with
trying to
2016.
achieve
You may
during our
remember
meetings,
that,
right?
in the early part of
Just to
2016, we had a similar
learn how to read the levels, because
expectations. That was different.
for sure we are
At the
not
time,
creating
it
the
was
signal
not
service.
because
That's
it
for
was
sure
much
what we are
more
trying to
risk
do.
premium,
That's why we are
but
calling
it was
these meetings as an educational
real
live trading
danger
room.
of the angle.
So trying
So this
to
is good
read
news in the sense
some
that it
levels.
says that expectations are responding to the economic outlook, but are not the anchoring. However, this increase in the negative risk premium might reflect either that market perception that either we don't have
Okay, so we had this 5
And
minutes
I think
strong
we
close.
showed
That's
in
what
plenty of
I've been
instruments.
looking for. So let's
If
have a look if
anything,
we
the
can
market
get
reaction to my ECB watch
retest of
speech
this
last time
56.
shows that, we
And
have plenty of
the first
instruments.
opposite, I'm gonna
And,
to try
of
to
course that
a little bit
market
lower,
reaction
guys, and I will try to
demonstrated that
take
markets
long.
have fully understood our reaction function. Now,
Stop
the
is gonna be
second- the
2
second
pips
possibility
below the
is
low,
that,
so it's gonna be around
that we
49,
may
maybe
well-
48.
the markets may
So
think
eventually
the
gonna
Governing
be
Council would
56. That's gonna
tolerate
be something
the low
around
inflation, too low inflation
8,
without,
7, 8 pips stop.
being the anchor
And
that
I'm
we
gonna
want.
to target something
Now,
around
let me just
20,
dispel any
25.
such impression. We, of course,
So we are talking
remain
about
fully
the move
committed
back towards 80.
to
So
return
we are
inflation
talking
to
about retest
2%
this
without
supply
due
to the
delay.
high over here, if
But
we are
also,
gonna to
let me
get
also
that.
point out another aspect of this. Our inflation aim doesn't imply a ceiling at 2%. Inflation can deviate from our objective in both directions, so long
But
as
I'm
the
not
path
waiting with the
inflation
order. I wanna see
converges
what's
to
going to happen
our
here.
medium-term
I would like to
objective.
avoid waiting with the order here.
Now, the second question is about this
It might happen something
threat
like
of
this
tariffs from President Trump to the Europeans.
within
Of
few
course,
seconds.
we listed the threat
It
of
might happen
protectionism
something like
as
this, and I'm
one
gonna
of
be
the,
done. I don't wanna.
potential
I would like to see some kind of the,
factors dampening
of course,
growth
on a
in
smaller
where
time
and elsewhere
frame.
in the world
But
as
the
well. So
level
this is
we are
different
watching
from this
is
viewpoint.
based on the higher
And we
time frame. It's
certainly,
based on this
well,
bottom
we have
of
to
this
see first of all what
consolidation.
happens,
So
because,
I
as we've
assume
seen in
right
the
now
past,
what happened was stop
between
count.
words and
The
deeds,
thing is that we are getting
there
closer
is often a big
towards the
gulf.
end of the hour, and the
But certainly
early candle doesn't look
even the
great
fact
right
that
now.
these threats
But
are
for
being
now, I
vented
assume that
with
we
some
just took out the stops,
frequency,
right?
they
Nothing
certainly
else
undermine
here.
general confidence. And,
Of course, early close below
there's no
will
question
open
about the
12:30,
fact that one of the
12:20, right?
reasons for the general weakness in the
The
Eurozone
yellow
right
zone
now
we have
also
here, and
as
then
well
eventually
will
retest of the weekly
is,
open. But
is
I'm not sure
the
if it's not that deep.
confidence weakening that has come from various threats.
No, Mer,
various
I'm
combination of
just
effects,
watching
but certainly
dollar
also
index.
from these threats of further protectionist measures.
Mr. Sims?
We are creating the situation we discussed during the pre-London Open, right? Looks like we were trying to take out few stops to the upside.
The reason I ask is because
Shame we didn't hit the top of that channel. Still waiting. Maybe after the US cash open.
On board, meaning much of the preparatory work would have to have been done by a predecessor. So do you see the Governing Council putting off any decision on Teltro until Mr. Lane comes in? That would be in July, at the July meeting, I guess. And a second question on the tiered rate deposit issue. Did you discuss the merits of this at today's meeting, and might we see this on the agenda of the Governing Council during your tenure?
Thank you. I mean, we certainly welcome Philip Lane. Is a great addition to our team, but it's not that we're actually put in our calendar our decision making depending on who's going to be on board or not. So let me just separate the two things. You asked me whether we discussed the TLTRO deal. No, we didn't. And I've said this in the beginning. We will discuss it on it does say will be details on the precise terms of new series of targeted long-term refinancing operations will be communicated at one of our forthcoming meetings. So the pricing of new TLTROs will take into account, and I gave the two criteria before, but we haven't discussed that today. On the second question, no, either. We haven't
And guys,
discussed
if
the merits or the cons.
I like to call it double kick, right?
mitigating
Because
measures.
there is a ECB rate decision
The specific
with
word.
Draghi press conference.
So
There was
it's,
a US
we
CPI,
sort of-
and
we started a
these
process
two
where we will analyze
events
all
cannot move the
measures,
market,
specifically the two that I mentioned in the introduction.
I don't know what
statement.
can move the market.
This analysis is based on these.
That's why I'm
criteria,
looking to entry almost to the peep,
and that's it.
right? That's what,
And we
because
need further
I know that the move
With
might
further
be
information
very,
that will
very
come to us between now and
small. That's
June.
why I
And
need the
assess
grade entry.
projections, that we'll have in June by the staff of the ECB will be an important part of this information set.
Mr. Plickert?
Having said that, Philip Lane is a fantastic addition to our team. Thank you.
Mr. Draghi, another question from me on the issue of deposit rates. Perhaps you can comment on
So let's
numbers
check the bigger picture, guys.
given by the head of the
Let's
German
check the
Banking
bigger picture one
Association,
moment.
claimed that the European banks are at a disadvantage of even 50 billion vis-à-vis the American banks. It's well known that the European banks.
All right, guys,
around
remember we were discussing this yesterday.
on the negative deposit rate.
Remember,
And he claimed, and when
let
looking
me
to
remove
US,
the
you see
one.
they even get a
Let's
positive,
leave with this original
rate
range.
for their
And
deposits,
let's leave with
of
this
about
highs
4%.
over here.
So
That's the dollar index.
calculated like a 50
So when I'm talking about the
difference, and that's
move
big
higher here,
disadvantage, and this is a
it's
drag
gonna
on the
be
European banking
trying to
system.
translate into euro dollar, we are talking about the move to the downside, right?
Well, I take
Guys,
note of the
if we,
fact,
because what we
it's a
did
fact,
yesterday,
and,
we correctly predict lower shadow
by
at
the
the
way,
end of the day.
so we
The
asked
truth is
ourselves,
that I
how
thought that we
much
are
is
gonna
the overall profitability of
that we are
banks
gonna
will
to
be
get
affected
lower
by
shadow,
the
even
negative-
lower, right towards
negative,
96.80,
deposit
96.65.
rate.
That's what we were discussing
And,
yesterday, right?
And we're
We're trying again today, but once, and look, we just retest this 1250 on euro dollar, which was translated into the retest of the yesterday high here, right?
Because
If we are gonna to manage to get above this and close the day above, then really euro dollar bulls might be in trouble. For now, what? We are inside yesterday range.
Of Eurozone banks is by and large
Would be great to try to close
like the
above
ones in Japan,
Monday low,
higher than in the UK.
get back inside the range from the
Small negative rate,
bull's
and of
perspective.
course lower than in the United States. So, and then of course, but I did say in my ECB Watcher speech that so we look at this. As it says here, we also consider whether the preservation of favorable implications of the negative rates we can ignore these implications. The market reaction to that ECB Watcher speech side effects, if any, on bank intermediation. So we'll look at
Okay,
that.
guys, as we are approaching top of the hour, 2 minutes left. Probably I'm not gonna be interested in these longs anymore. Okay, we saw strong initial reaction when we made the stop count.
forward guidance.
right?
Can you give us any clarification on that, please, particularly on the downside? And
But
also,
looks
have there been
like
any discussions, even in a
early,
theoretical sense, about
it's
whether
not gonna
if
look
there's a
great.
resumption of QE, could equities or would
But
equities
maybe we
have
will
to
try
be
to
part of
retest,
that
and
program, given the limits
that's
on
why I'm saying
credit?
maybe, right? That's why I'm saying maybe. I'm still watching.
Well, really, the second question, we haven't discussed that. What the Governing Council did today was to assess the
Now we got this retest of
which is
56,
a weakening
and again we see the reaction.
picture
But
of
look at the close, one of the lowest
To
over the period of this last
reiterate confidence
15
in
minutes.
the convergence of the inflation path based
second low
on a
close.
series of factors. And
And we are
and then
selling into
we
the
assert,
close of the
reiterate
hourly.
the readiness to use all the possible and necessary, all the
So
instruments.
if you
that
are going to get the
necessary
breakdown,
with the
12.35,
contingencies
12.25
that come.
next target, it looks like.
And this was, I would say, unanimous. And this deliberation to use all the instruments, it was not the time. I did say something at the beginning. This time is not the right time to say, to be sort of, I don't like this instrument, or I'd rather prefer another one. We are not yet there. And once we will be approaching that point,
All right, so we have
coming from, about the
top of the
economy
hour.
and the
That's
and
the lowest
inflation,
close.
we will be better positioned to see whether further action is needed beyond. By the way, let's not
Weak,
forget
in my
that our
opinion.
forward guidance has indeed in the past few months automatically responded to the weakening economic conditions. And let's not forget also
Tweezer bottom
that
on
this
1 minute
forward
chart.
guidance
Jeez.
is chained with the horizon over which we'll carry out the repurchases of the bonds. As you see, it says, we intend to continue reinvesting in full the principal payments for maturing securities purchased under the asset purchase program for an extended period of time, past the date when we start raising the key
Okay,
ECB
what is
interest
going
rates.
on
So
other
whenever
markets?
the date when we raise ECB interest rates moves forward, so does the horizon over which we'll actually undertake the purchases. And in any case, for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. So you see that in the existing toolbox, in the existing and in acting toolbox, we already have optionality
Oil
to
might be
extend
interesting
the existing instruments.
after the
But
EEA.
with the statement today, the Governing Council also said that it's plainly open to use all instruments
Probably I'm gonna
that would be required by
watch
the needed
DJ
contingency as
later
we
today.
gather further and further information.
Might be more interesting than Nasdaq. But let's focus on euro-dollar for now.
I have a
Nice
question.
first
The
minute of the new
minutes,
candle.
or the minutes actually are suggesting that some governing council members were not really happy to adjust the forward guidance on rates according to what the market thinks. And some analysts call it backward guidance. You can't be happy with that. So could we get an update on the rates forward guidance as soon as June? And the second question, the question is that the minutes, the minutes, the accounts, they are suggesting that.
Okay. You are forgiven for this.
Learn it. They are suggesting that some members of the governing council are not happy to align the forward guidance on rates with what the market expectations are, so to extend it further in the future. My question is,
That's
they
the
call
easiest
it
market
backward
to be
guidance,
trapped.
which can't be what you would like them to think.
So we have
So do you think it's realistic to assume that we get some more of an alignment in the forward
bounce,
guidance
3.
on rates as soon as June or perhaps in the forthcoming
see.
meetings? And the second question would be, how much do you, or how big is the risk of a recession for the Eurozone? Thank you.
as you've probably seen, you must have seen from the accounts, there were other members that actually wished much more extended forward guidance. So this is part of natural discussions we have. And again, like for the other instruments that we briefly mentioned before, we didn't discuss this. It was not, in a sense, that if I have to characterize this meeting, it was not an operational meeting. It was more of a meeting that would characterize the stance of the Governing Council towards further action. In other words, people are acknowledging, Governing Council members are acknowledging the weakening of the cycle, the weakening of the economy, the fact that this weakening will extend into the rest of the year, the weakening of inflation. In fact, I just said that the inflation will probably bottom in September. They acknowledge the sliding of inflation expectations. At the same time, they acknowledge also the underlying strength of the economy, the fact that some of these temporary factors are unwinding. And so it was just it was a meeting where the main goal of which was to reassert the readiness to act if the contingencies would warrant so. And again, as we move towards June, where the new projections will be available, we'll be gathering more and more information.
Now it's finally something going on. Maybe.
The estimated probabilities of a recession remain low. Again, there is a difference with 2016.
Probability of recession staying low.
That's
I
what
thought
we
that
see now. It's still a relatively low probability.
there is already recession in EU.
In my ECB Watcher speech, I gave a number of, I think there have been 56 soft patches in the last 60 years, 50 years of the Eurozone, and only 4 recessions. So for what it's worth, really, because that's historical evidence looking at the past. But overall, probabilities of a recession, also implied financial probabilities of a recession, remain on the low side.
I can't watch it. Simply, I'm tired of watching this. Let's make a break. Let's get back closer to the US cash open. Maybe something ahead of the option expiration. Maybe something will happen. So we are going to try to summarize the day. So yeah, let's make short break. I'll be back around US cash open.
All of its instruments as appropriate. In that, if that contingency were to materialize.
Isabella Bufacchi, Sole 24 Ore. Mr. President, I have 2 questions. One question is on the mitigation of side effects of negative rates, if any. Are you comfortable with the markets that might read into this, whether there is any measure, a signal on forward guidance, in the sense that if there are less side effects for banks, then negative interest rates might stay for longer? And so are you comfortable with the market maybe be reading into it too much? And on the fact that you are looking at 2 measures on banks, one on tiered system for deposits on negative rates, and the other on TLTROs, does this indicate somehow that there is a risk that the excess liquidity is somehow trapped into the national banking systems, and that there is not enough cross-border lending, and that because these 2 measures are good for some banks in one case and for some other banks in another case? Thank you.
Well, I'll start with the second question. Clearly, we would wish to have much more cross-border lending than we have. But this is also a part of the ongoing discussion on creating on finishing with the banking union and creating a capital markets union. It doesn't come out naturally. However, what we are observing is that in some countries where credit growth is especially significant, part of this growth can be explained by the participation of banks, especially large banks, to syndicated loans that actually get used in other parts other than their countries where these banks are established. So we see some cross-border lending. In relation to the TLTRO, no, I don't think the liquidity gets necessarily trapped in the countries. Now, the other question was whether one would associate the presence of mitigating measures with a lengthening of the period during which interest rates remain negative or not. I don't know. I have the sense that you are right, that markets perceive this way. I don't know what to say really, because it's a fact that we had negative rates now for many years, and there were no mitigating measures. It's also a fact that the impact of negative rates, it's very different when they start and then when they've been in place for a long period of time. So we also have to assess that. And it's not necessarily, well, that's what I want to say. It's, I don't have other things to add to that.
Mr. Fallis?
Thank you. Tom Fallis from the Wall Street Journal. I had a follow-up question on what you were just saying. You talked about the market reaction function to your speech at the Watchers Conference. I mean, does this mean that mitigating negative rates would open the door to a rate cut? Would you be able to cut rates deeper? Because if such a system were in place, and by how much do you think? And how much would the lower bound fall? And the second question is on what you said about the 2% inflation ceiling, how 2% isn't a ceiling. Does that mean that you'd be happy to overshoot or aim to overshoot? Thanks.
Well, on your second question, I will answer saying exactly the same thing. We don't tolerate too low inflation. We remain fully committed to using all necessary instruments to return inflation to 2% without undue delay. Likewise, our inflation aim doesn't imply a ceiling at 2%. Inflation can deviate from our objective in both directions, so long as the path of inflation converges towards our medium-term objective. And I believe I must have said something close to this or something to this extent a few other times in the past few years. The other question is this. I mean, many of your questions could be captured by the following question. If you are to introduce mitigating measures for banks, for the side effects of negative interest rates on banks' profitability, would this imply low rates for longer or lower negative rates? Well, we haven't discussed that. We haven't discussed the introduction of mitigating measures. We said that we want to analyze the side effects and possibly the mitigating measures. So we are not even discussing the first stage of this reasoning, not to mention what this would imply.
Philippe Lacour?
Philippe Lacour, Agence France Presse. Oh, yes.
Let me just restate one thing, that the market reaction to the ECB Watcher speech, whether it was linked to this part or to another part, showed that markets understand our reaction function. Please.
Mr. President, so Agence France Presse, Philippe Lacour. One question on the Brexit, if I may. Since there are signs in favor of a longer Brexit today, if so European Council decide this direction, could you maybe cautiously say something or welcome this possible solution? And I want to remind you, sub-question to this, what you said here in January is that the Brexit thing will not affect the EU economy that much. Would you state the same thing today? That is my question to Brexit. And the second one is more on the European elections coming in the end of May, with possibility of nationalism or populist parties rising. So it is the capacity or ability of the ECB or the national central banks to intervene somewhat in the debate and promote the idea of Europe, which is embodied in Euro. So in the coming weeks. Thank you.
Thank you. Answering the second question first. The central banks usually don't intervene in the political debate. Central banks can, on occasion, and especially the ECB, can certainly defend the European framework and point out to the ways to improve on it, to complete on it, to remedy to the weaknesses that the recent experience and not so recent have shown. But I don't think central bankers would be right to intervene in a political debate, either in the European context or in a national context. I think I gave two speeches of recent, one in Bologna and the other one in Pisa, both focusing on the one in Bologna especially focusing on the fact that in this globalized world where challenges are global, we got to be together to be truly sovereign, to be truly masters of our own destinies. Because on our own, we would have no way to cope with these global challenges. And we have, the evidence is in front of our eyes every day. And in Pisa, the speech was more oriented to explain why the euro has been a very positive experience, and at the same time, to identify the weaknesses of the present situation and what we should do to make sure that the benefits of the euro and Europe in general are distributed to everybody. On the Brexit thing, I think the consequences of a Brexit are different, whether it's a hard, disorderly Brexit, or whether it's a properly managed and with an adequate transition period. So for me, again, 2 days, whatever, before the vote, they're having vote every day. So, but just it would not be right to anticipate one thing or another. What is clear, however, is that the whole discussion on Brexit, which has lasted now many years, really, is part and parcel of the overall uncertainty that is hanging over our continent, and I think is hanging over the UK as well. It's probably unavoidable of any very important political discussion, but that's a fact for our economies. Also, to be looked with attention on the real implications of the Brexit on the real economy. As I've said many times, in the aggregate, if you take the aggregate numbers, you don't see. You wouldn't expect much of an impact given the relative size of the two entities. But there are two important caveats to that. One is that certain countries are especially exposed to the UK economy, and of course they will have consequences, and the consequences may be serious. And their serious consequences are bound to reverberate on the rest of the continent. The second caution is that the value chains are very extensive and the ramifications of value chains are also quite broad. If we are to reach a point where these value chains, which is not at all to be taken for granted, by the way, but if we are to reach a point where these value chains were to be broken, then we can have lots of local and possibly serious effects. But again, I'm still hopeful.
Ms. Wackett?
Julia Wackett, Börsenzeitung. I have a question regarding your home country, Italy, because yesterday they cut again the growth forecasts, and a lot of economists are very worried about Italy, that in the next recession, Italy will face serious troubles because they will probably have to save and don't have the fiscal capacity to counteract in a recession. So how worried are you about Italy? And also, again, about the decision from yesterday to appoint Yves Mersch as for the supervisory mechanism. Is there already who will replace Yves Mersch in his position at the ECB? So will Ms. Lautenschläger take over Yves Mersch's role? Or yeah, thank you.
Thank you. The data on the Italian economy didn't come as a surprise. There had been already downgrades in the forecast, in the growth forecast for Italy and for the rest of the Eurozone, as a matter of fact. And so, from this viewpoint, it's not a surprise. It's quite clear that the priority there is to restore growth and employment, and Italy knows how to do it. It's very important that these priorities are being pursued without causing an increase in interest rates, because increases in interest rates are contractionary. So I think it's in simple words, that should be the aim of economic policy now, there. On your second point is, yes, Mr. Mersch has been appointed by the Governing Council, Vice Chair of the SSM. It's again another great addition to the SSM team, and the Governing Council was pleased by that choice. So we have now a different, you asked me about who's what? Who's doing? Oh, the portfolios. Mr. Mersch will remain responsible for legal, and the distribution of portfolios will be given, I think, immediately after the press conference on our website. But I can anticipate that some of the rest of Mr. Mersch's portfolios and some of Mr. Curré's portfolio will go to Ms. Lautenschläger. So it's a rearrangement, different combinations. Thank you.
Mr. Huyton?
Luke Huyton, Market News. Mr. Draghi, Olli Rehn has called for a re-examination of the monetary policy framework, something the Fed is already doing. Would price level targeting be one possible measure the ECB could adopt? My second question was, according to the account, rather than the minutes of last month's monetary policy meeting, it was highlighted that growth might not be mean reverting, as typically assumed in projections. Do you think this reinforces the need for such a re-evaluation?
Reinforces what?
Reinforces the need for such a re-evaluation, as suggested by Mr. Rehn.
You're asking me a very difficult question, which has not been addressed by the Council, and we have to see exactly what it means, where it's driving, whether it's justified or not. So we have to see. It's just one statement. But having said that, I mean, the Fed is embarking in a revisitation of the monetary policy framework, and again, we have to see what's going to come out of that. These are not processes that can be discussed in one or two meetings. So it may take several months.
Mr. Ewing?
Jack Ewing, New York Times. Mr. Draghi, you mentioned a couple of minutes ago the benefits of cross-border banking. As you know, there's a discussion about a big banking consolidation here in Frankfurt. I'm sure you don't want to speak about specific banks, but as a general principle, would it perhaps be more beneficial for banks to be looking for mergers across border rather than creating bigger domestic banks? And a related question, I wonder if you can tell us anything about what role the ECB as banking supervisor might play when there's a major banking consolidation in terms of oversight. For example, would you be seeking, perhaps require banks to raise more capital or even try to block a merger if you thought it was unwise? I wonder if you can tell us generally what the ECB's approach will be. Thank you.
Thank you. I mean, the role of a supervisor, second question, the role of a supervisor when witnessing mergers is one where you want to make sure that the transaction is successful. And to be successful means that that not only pleases the shareholders, but actually it creates an entity which is strong and capable of coping with the various challenges. I think that's the role of the supervisor is not necessarily one where it wants to address or the agents towards a certain direction, but it just unless the direction they've chosen is leading to a suboptimal outcome. The first question was about cross-border lending, cross-border mergers. I don't think there is a clear preference to, I don't think, that's my own view. There isn't a clear preference towards having one or the other. What is pretty clear, however, is that the banking system in Europe is overcrowded. The need for consolidation is very, very significant. And part of the structural weakness of the banking system in Europe is caused by this overcapacity in banking, which is not overcapacity in the sense that is the little production of credit. It's overcapacity in terms of number of people, number of branches, costs. We're talking about countries where there are banks that have a cost-income ratio of over 80, 90%. And they even quarrel about negative deposit rates as being one of the causes of their lack of profitability. I think I'd rather think about this. I'd rather think about low level of digitalization. And I think there are a series of actions that improve the business model, rationalize the business model, that can be achieved, however, only through consolidation. So there is an issue about, there is a relationship between scale and the capacity to undertake the investments that are needed to improve technology and be competitive, especially in certain business models. I wouldn't argue that all business models are like that, but certainly in some of them, this is the situation.
Mr. Smith?
Good afternoon. Jeffrey Smith from investing.com. You talked about the toolbox that you've got, but you've had 10 years of LTROs, TLTROs, negative rates, quantitative easing. You're still not at 2%. You're still not even really close to it. If anything, your core inflation rate is still trending downwards slightly. What makes you think that the same toolkit will get you to 2% in
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.
had expected. And there are reasons for that. We mentioned what the reasons are, and we mentioned that the risks are tilted on the downside.
Hi guys, welcome in third and the last part of today's meeting. If we are gonna, the question is if we are gonna to see rebound soon. To be honest with you, I know we are gonna to discuss it within the few minutes. The thing is, it might be the question depends when you join the meeting.
Inflation rate will converge.
What this 50 pips is, right? From the high. What's special inside this 50 pips? It's just what implied volatility was saying. It was what option traders were expected, right? The thing is for me, lesson is learned because maybe I had too big expectation. I was looking to sell, but I was looking to sell within the highest yellow zone based on the open and high from the previous ECB day, right? Here.
Hello, my name is Matthias Fiedler
Here.
from Pro7 Galileo.
I've been waiting for 50 pips to the upside, right? Unfortunately, we just took the stops above yesterday high and that's it. And then 50 pips down. So, based on what option traders were expecting, we're down for a day.
How cheap
does it mean we are going to see the bounce? Well,
to borrow money.
I don't know.
And nowadays,
so what I'm going to look for?
Which means that borrowing is cheap. Which means that you can
we hit this demand
money to buy a house
right under the yellow zone
or other consumption goods.
Right? We see price trying to go higher.
Same thing for companies. Companies, they can borrow more
15-minute chart.
Buy machines, equipment. This means that they will create jobs. And in due time, this means, and we are seeing
quite a good combination, but still.
And when
but still, that was another negative move. Look.
And well deservedly in all countries, but of course, especially in Germany. And this in due time.
Right, another negative move. Maybe not that big like the first one, but still.
That's what we do.
We're trying to recover. What I'm looking for.
Thank you.
Based
before we
on the combination that we are getting closer to the bottom of the range we are moving lately, right? 12, 1180 to the upside 13, right? So because we are getting closer to the bottom of the range, as long as we are within the range, I'm going to try to look for longs, right? So yeah, I'm going to look for longs. What I would like to see, for example, based on this 15-minute chart, I would like to see, let's say, I would like to see swing low creation, right? So I would like to see the retest of 1235 this time.
Much of what I say in the press conferences.
And if that's the case, my stop is gonna be below the below today's low. What's gonna be my target? My target is gonna be around 1257, right? If I can get that, so it's a 20 pips.
To express my deepest thanks to him.
That's gonna be possible. 22 pips target. What's gonna be my stop? Around 6-7, right? So that's almost there with 3x risk reward ratio, right? All right. Yeah, ECB press conference now concluded, so we are done with Draghi. There is a US cash market open. Let's have a look what we have on the DJ side here briefly. Some kind of the range based on the late price action yesterday and what we've seen during the whole pre-market session, right? So some kind of the range creation, some stops to the upside. were taken out. All right, but I think, and I'm not gonna be surprised if we are going to see the higher move, because we are going to move within this reaction to the downside from yesterday. So we may see higher levels, right? And I'm gonna carefully watch. Ideally what I would like to see, I would like to see retest of this move to the downside, even stop count, and I would like to see 30-minute candle looks like this. Green rising candle, shadow, upper shadow, but close below. Maybe something like this. So, trying to visualize what we are talking about. Around this zone, right? That might be my setup. So we are trying to summarize. So that's what I'm gonna to look for on a DJ, right? And I'm gonna to monitor DJ today. I'm not gonna monitor Nasdaq. I'm going to monitor DJ Dow Jones today. That's the first thing. The second thing, I'm gonna to watch carefully what is going on after the official EEA oil inventories, because from the daily chart perspective, right? Let's make some cleanings. From the daily chart perspective, we are testing supply right now. We are testing supply right now. Would like to see rejection and would like to see retest, at least retest of this broken consolidation, as we haven't seen test of this one, right? So taking into the consideration risk-reward ratio in my favor. Of course, there might be some kind of the reaction within this Riley base Riley, right? But that's gonna be my target. But I'm gonna to switch to the intraday chart. Okay, ideally I would like to see either price testing based on my chart I'm using here, testing something in between 64.60, 64.70, so retest of yesterday high without stop hunting or with stop hunting, right? So I may try to trade under yesterday high with tight stop. Once I'm stop out, once we are gonna to see rejection after the stop hunt, I may try to reopen the short, right? I think that I'm not saying we are gonna to totally turn bearish. What I'm saying that it's a finally time for some kind of the correction on oil, because we hit the target based on this something related to inverted head and shoulders. We have this supply over here, so yeah, that's what I'm gonna to look. But I'm waiting for EEA. If I'm gonna to see the strong move to the upside, then I'm gonna to eventually skip the trade here. Euro dollar, I'm looking for this swing low creation. I'm looking for a pullback here. And what kind of the pullback I would like to see here? I would like to see very soft pullback in terms of the how to call it. I don't want to see aggressive move to the downside, right? I would rather want to see 2 steps to the downside, 1 step to the upside. 2 steps to the downside, 1 step to the upside. 2 steps to the downside, 1 step to the up. You know what I mean. And retest of this yellow zone somewhere here, right? And then I might consider longs here based on what we discussed. First target is gonna be around 50 plus, right? So that's 22 pips. Taking into consideration stops around 6 to 8 point, it's not bad risk reward ratio, right? And still, even if we are within the range, I think that at some point we are gonna to revisit this 1320, 1330, okay? We'll see. Trying to targeting on the first move, trying to targeting something above 50, 55, it's not correct move, right? Because this short accumulation here after the breakdown has not been tested here on this 5-minute chart. So it might be in, or we are going straight from here without retest. I'm waiting for the one I'm waiting for. Then we are gonna to see the pullback, and then once this one is consumed, we will see higher levels, right? The thing is that I might try to, based on dollar index chart, daily dollar index chart, right? I may look around for shorts above 50. Just a reminder what we discussed based on the dollar index, right? So retest, just I will try to explain not to confuse anyone. Yes, I'm gonna, it might happen, I'm gonna try to trade both sides, right? The retest of this yellow zone, the swing low creation based on this 15-minute chart, it's pure intraday speculation on a move back towards 50, 55. Nothing else for now. I'm not gonna marry it with this position. Okay? Just to be perfectly clear. The same with this short. If it's gonna work above 50, I just wanna see maybe retest of the yellow zone, maybe retest of the weekly open, blue dotted line. Alright? So hopefully I'm perfectly clear from my side what I'm gonna to do. Pound, that's gonna be the challenge. I haven't seen any information in relation to the Brexit from the Brussels. Okay, they are just arriving. So watch out for pound fireworks because of the EU summit, Brexit related, right? So maybe instead of euro there are gonna be some fireworks and some nice setups on the pound. Now, what kind of the setups, Piotr, you are talking about? All right, to the downside, it might be, for example, stop count below yesterday low, so trying to extend the low of that yesterday move to the downside, hitting this yellow zone. So we may try to create something like over under with stop counting, right? Something like this. All right, just a reminder, as long as we are hold above 130, 129.70, bulls are quite good, right? On the other hand, if we are going to see spike to the upside, I would like to see stop taking above yesterday high, above Friday high, retest of this orange supply. Even better, I would like to see the bigger spike. Maybe not that big. But anyway, we have a supply towards 32.20 and then 32.50 as well. So I'm watching this range. Now, how I'm gonna to watch? How I know if it's gonna be stop count above yesterday high only or higher? Okay. What I'm gonna do? That's the range. We are moving within, right? So once I'm gonna see the break to the upside, I'm gonna be ready. You know what? Let's delete this line. Let's delete this line. Once we are gonna to close above, right? I may consider this as a breakout, right? So if that was the range, so after the breakout, what we may see? We may see Riley higher, right? So another attempt is something in between 32.20 and 32.45.50. So looks like it's gonna be well covered. If we are gonna to move without upper shadows, but in that case, it would be good to take this into the consideration. We are gonna to get this middle supply, right? We have to be active, we have to monitor. So once there is a breakout here, so I may consider short only on a breakout and quick rejection. That might be for me short setup towards the bottom. Once we break to the upside, try to consolidate a while, I may consider longs, doubling the size of the original range to the upside, 30-20, and then I may try to look around for shorts again, okay? That's how I see the things on the pound. At least for now, everything may change 15 minutes after our meeting because of something. That's how I see the things right now. Euro is trying, but every move to the upside is immediately consumed. So every time, yeah, look, every time we took higher, pull back, break, pull back, break, pull back, meaning that all these tiny demands is consumed in my opinion. So at some point, another retest of this yellow, as I mentioned, it might be much more aggressive than what I've been thinking about. Anyway, I'm not gonna do anything before the option expiration. That's the crazy time. I may consider something after 4 p.m. CET, ahead of the London fix, but then also London fix is a crazy time. I'm gonna probably, as long as we are within the channel, I'm gonna to monitor top of that channel, bottom of that channel. In terms of the bottom of that channel, I would like to see small lazy slide towards 110, 160. That's the zone we were discussing yesterday, right? But I'm not the big fan of longs on dollar yen. Maybe closer to 110 psychological level, because that's the level where we can get the verbal intervention from the Bank of Japan authorities. Okay. We are still within the testing period. I'm preparing the webinars I've mentioned to you some time ago. I'm preparing webinars to discuss in details the strategies I'm using, just for you to be on the same side with me when we have the meetings. But yeah, we have to be patient simply. There is no rush. Slowly. Euro long, thanks. I put sell limit 31.50. I think 13.50. 25, 12.50, I would say. Okay, okay. DJ does nothing. Crude, that might be the last rally just to grab more stops. Not interesting in Euro Yen now. Not interesting in Aussie. Much more interested in Aussie Kiwi, but after the strong pullback, and we are still above 50-50. Canadian dollar. If we are gonna to get the pullback towards the zone we were waiting at yesterday, let's say we are gonna to see spike, oil spike, and we may see cut spike to the downside, right? I may consider tiny longs over here as well. We'll see. I'm gonna watch pound. I'm gonna watch euro, and I'm gonna be fine. You don't have to watch 120 instruments. Trying to be good at 1, 2, 3, right? That's why I like majors very much. That's why what I'm telling you very often. I'm trading rarely indices, rarely oil. Yeah, my focus is on euro dollar, pound dollar, dollar yen. Sometimes other currency pairs, but from the intraday perspective, I love those three, and sometimes euro yen. From time to time, dollar CAD. From me, that's it, guys. Unless you have some questions, we can switch to Bitcoin for a second. Looks like bulls are ready to break to the upside. Oh. Looks like we are ready, guys. We ready. So we are forming Riley base, and attempt to go higher. This 6,000 never tested after the breakdown. That might happen. All right, euro finally testing, but it's not good time. 10 minutes till the top of the hour, and that's taking what happened lately over here. That's two biggest falling candles within that period of time. Maybe better to be careful here. So because we took out this DLO, so let's draw another one. Let's see what's going to happen here. Okay. Yeah, if we are gonna to break to the upside here, that might be again within 1 day, maybe 2, or even few hours, similar to the move to the upside over here. We'll see. Guys, tell me if there are any questions from you, or we are good to go. There are no questions, then we can try to finalize our meeting. It was my pleasure to cover ECB and CPI for you. Just a reminder, guys, Swiss franc. I'm not trading often Swiss franc, but we can try. We're trying above the parity, and that's the positive sign. So based on the daily chart, what I can see here, the first not tested supply is around 0070 to 10120 based on the daily, all right? And possible demand based on this daily and on this latest rally, because we are trying to get back above the zone over here, which has been broken to the downside. So what I would do, let's check if it's gonna to work. I would like to take the last move to the downside, make the measure, because it looks like it's a false break. So looks like we may try to hit these stops. So we can try to hit the high based on what I can see, right? Based on this move to the downside. So the bears are in trouble. So how can we try to join? I would wait for daily close. Then I would use yesterday high. If we are gonna close here, right, where we are, or higher, I would use yesterday price action and day before, so Monday, Tuesday combination as a possible demand. So let's have a look what we have here. Let's look what we have here from the intraday perspective. Let's go to hourly. Oh, everything was tested. Break test, break test, break test. That's not good. But anyway, I would use, yeah, this one maybe. What we have manipulation over here, but that was tested. Stop were taken out. This stop was taken out. Looks like it's a bullish setup here. So probably even bearish euro is rising against the Swiss franc. Oh no, sorry, but we were rising. Weak, Swiss is weak. But I would be careful around 101, 101, 0070, 10120. It looks quite bullish. And of course we are above parity, that also important thing. And Bitcoin again. No, someone's told me that this moving. It's not moving. Range bar over here. Long euro dollar with tight stop below the low over here. Let's have a look what we are gonna to get here. Okay. So I'm gonna to get something here as well. And we've stopped. It's a little bit wider stop than I thought. We will see what's going to happen. That's it from me today. It was my pleasure, guys. I wish you pleasure. It was my pleasure. I wish you nice evening. Have a good one. Just a reminder, later today, EEA crude. Then at 7:01 CET time, 10 years auction in US. 1 hour later, FOMC minutes. And we are covering pre-London Open tomorrow, and we are covering pre-London Open on Friday, both 8 a.m. CET. Have a good one, guys. Take care.